everybody's expecting interest rates, when interest rates fall, the stock market to explode. Let me explain what I think is going to happen. First off, it's not COVID. It isn't. Everyone thinks that because housing's high, that it's going to fall like it did in '08. Well, we don't have the same setup as '08. No. Do I believe it's going to go down? Absolutely, it will, with the inventory surge when they cut interest rates. I'll do another video on housing shortly. But, you know, when we cut interest rates during COVID over here, stock market was low. It doesn't look very low there. Let's see if we can go to a weekly. Are we past 3 years? Here we go, right there. We were all the way down here when we cut interest rates. We're not down, right? We were all the way at 2016 levels. We wiped off virtually 4 years of gains on the market. Okay, that's not the case right now at all. You know, we have this cup and handle right here. We're cutting when we're high. What has happened when we've done that? No, it's not. We're not going to go down just because it's high when we cut, but 2002, right around the dot-com bubble burst, right around '08. We were high, and when we cut interest rates, everything collapsed. It's also going to cause the housing market to plummet badly. Why? Because there's going to be an inventory surge. Housing didn't start to rip until they said that they were going to raise interest rates. Then it went up, and there was crazy bidding wars. They just left it low. It would just continue at a higher pace than it already was, right? Going up from 4% to 6% a year. If they were like, nope, we're leaving rates here forever, there would be no hysteria and hype. It wouldn't have happened. Housing went up when they said we're going to have to raise interest rates. So everyone's like, oh my God, this is my last chance to buy a house. And it was their last chance. Right? So now no one can get a house because no one wants to sell because rates are so high. Where else are they going to go? They're trading it for a house with a worse interest rate. I'm going over everything that I see happening here. Right? So inventory is tight. The higher they raise rates, the lower the inventory is because nobody wants to sell. Leading each houses to hold their prices, if not go higher. Especially inexpensive houses are melting up still right now in hot areas. In Florida, they are ripping. Houses below 500,000, they're not stopping. Expensive houses over $1 million, yeah, they're not doing anything. Or if it's a 2-bedroom for 900,000, that's not going anywhere except down. When they cut interest rates, the inventory is going to surge, and it's going to lead housing to fall. And it's also, in my opinion, going to lead the stock market to fall. What do I think's happening here right now? I think that we're pricing that in, and it's a buy the rumor, sell the news event. I'm sorry. It's ripping in anticipation. We got this cup and handle here. We may be cutting the second quarter of 2023. We could rip for a couple more months here. 2-3 more months. And I believe we're going to come down. How far? I don't know. Does it matter to me? Am I going to bet that the market's going to fall? No, I'm not. I'm not just going to buy puts and then, all right, cross my fingers. We got to go down. The economy's in. No, that's not going to work. When it happens, yeah, maybe. Judging on TA and everything else, depends on how overextended we are, what my indicators say. I enter on TA, right? Enter and exit on technical analysis. Now, does this even matter to me? I'll just dump my equities. You know, I can dump my equities beginning of next year if I want. And I can take a look at other things that it doesn't matter if the stock market's falling. It's not connected to it, that will go up and have always, just about always, went up when they've cut interest rates. Gold. Gold runs inverse of the dollar. This big drop right here was when interest rates were rising. Okay? This drop, this rip right here, y'all remember fall of 2018? You're like, oh my gosh. Powell said we're going to raise rates for 4 consecutive quarters. It priced that in the stock market. It sent it into a just collapse. And Trump came out and he's like, I'd buy the dip. And he said Powell should be fired. Powell reversed what he did, what he was going to do, and we dropped rates pretty much lower than where they were before. And the crazy thing was, inflation actually went down at the same time as rates went down. Nuts. We had a very, very, very good economy at the time. But it was other factors that didn't have to do with rates that were very deflationary at the time. What happened? Well, the stock market surged. 2019 was the best trading year. 2020 was not. Right? 2020 on the way down, yeah. On the way up, no. For equities, yes. Options, it was horrible. The options market was ruined. The spread, the IV was just maxed on everything. You swung a weekly and it went flat. You just got toasted. IV was fairly low in 2019. Spreads were tight. The options market was healthy. I mean, it was unbelievable. Gold ripped because interest rates went down. It ripped, and then we cut rates again with COVID, right in here, and gold just tore. We raised interest rates right here, right? Higher interest rates, higher dollar, lower interest rates, lower dollar, right? Dollar went higher here, gold went down, and I do believe gold's going to have a little bit of a pullback here. On top of that, just looking at TA, 1, 2, 3, each candle in the body getting smaller, reversal. I believe we're going to have a little bit of a pullback. I don't necessarily believe gold's going to punch through right here. It's going to come back a little bit, right? I expect a higher low, right? Low, higher low. I expect a higher low maybe around in here. And then from there, I see us just surging when they actually cut interest rates. We've been ripping on that anticipation, but we've got a massive cup and handle here. Massive cup and handle on gold. And it's been building. The left side of the cup has been building since 2011. The right side in 2020, the handle, right, for 3 years, going on 4 years now. Does it matter if equities fall? I don't care. Good, go ahead and fall. I'm right here, nice and cozy and safe. Right, what else do I have? Bonds. I already called it. I had articles out. I had video. I think I had a video out. I'd have to go back and look. But I had articles out, and I'm like, whoa, look. Are you guys kidding me? TLT runs inverse of rates. They cut rates. Yield goes down. Face value goes up. They raise rates. Face value goes down. Yield goes up. We're going to cut rates. The Fed said they will. We haven't done it yet. They're going to do it eventually. And when that happens, I mean, we hit a life. I got this thing almost perfectly right there. I got it at 84 and some change. Right? Almost perfectly at the bottom. Look at it now. 98. In 2 months. In 2 months, we're at 98 bucks. So they cut interest rates. The stock market can collapse. Bonds are going to rip. You know, back 5-6 years ago, TLT used to be a good hedge. One of the portfolios that I saw a lot of people, younger people doing is they would, they'd do half and half, TLT and SPY, or 60-40 with TLT and SPY. And when the market would tank, usually because of the dollar, the they were inversely correlated, right, at the time. Now that's not the time. Or now that's not what's going on, because they were both tanking for the same reason, which was rising interest rates, right? So higher dollar led both of them to fall. It was one of the worst years. 2022 was the worst year. I can't remember in how long for the 60-40 mix. If those veteran investors who know what the 60-40 mix is, bonds and stock market. Let's say, for example, VOO or VG or VOO or whatever, VTI. And let's just say BND, right? 60-40 mix, classic 60-40 mix. But if I'm in TLT, 20-year treasuries, which I am, and I'm up a ton, I'm also in Xeros strips, a little bit riskier, very, very interest rate sensitive. These things were just 63 bucks basically, and they're 85, right, on bonds. They could easily come up, in my opinion, when and if they cut interest rates to 108. I mean, that you're almost getting 100% on your money there. You're getting like 80%. But if I'm in bonds and gold, when they're cutting interest rates and equities are falling, do I care? if equities are falling. Everyone else is getting smoked. I'm playing the upside. I'm like, what are you talking about? It's rainbows and butterflies for me. Gold, see, bonds, TLT didn't give you anything. Look at that. From 2011 all the way to 2019, you know, almost a decade, they gave you squat. Absolute squat. If you're buying the dips, you know, you had something real solid that you could have in your portfolio as a place to hold cash when you needed it. You could sell it. You're getting a little bit of a return. You know, you could exit on pops. It'd be something to trade. And you're telling me people didn't buy right here at this. Look at this support. Look at this. And people weren't buying right there. Okay, let's see if I can go ahead and... It's not letting me draw the trend line like I want to. But I mean, come on. So, what about Bitcoin? If the stock market tanks and everything tanks, I do believe Bitcoin's going to fall. But it's setting up a even better, like if they approve the spot ETF, if the SEC approves the ETF, spot ETF, you know, there's trillions waiting to flood in if that happens. And then the halving happens, and then they lower interest rate. Let's say the stock market does fall, and it falls ferociously. You know, in my opinion, I don't want to be in equity, adding equities at the top before an event that's always sent the market down, cutting interest rates when the market's toppy. I don't. I am in some equities, but they're crypto related. And if you guys are in the Discord, which the link is in the bio, you can see that I've grown that portfolio since April over 200%. But I've nibbled in some other equities. I'll probably be scaling out AAPU, Leverage Apple, a bunch of other stuff. I'm probably going to be scaling out at the beginning of next year, after the first of the year. So I believe if the stock market tanks and everything tumbles and the economy's crashing, and that's going to pull Bitcoin down, which we'll see how that works because we got three catalysts coming up, right? On top of the Saudis with a $500 billion they're ready to put in once that spot ETF is approved, on top of institutions, on top of governments, on top of retail, on top of, what is it, like $6 trillion sitting in money markets right now in people's accounts, and there's a spot ETF, a little bit of that, let's say a $500 billion of that right there. I mean, the market cap on Bitcoin could just teleport over double. And if it's down, if it's tanking right around the time of the halving, if I'm adding right there, when it's tanking, everyone's like, oh, I knew it wasn't going to do it. I'm just going to forget about it. I'm going to be like, oh no, I see what's happening here. I could be adding Bitcoin right there. Blockchain-related stocks if I wanted to. And when everything starts to recover, that thing is just going to rip, in my opinion. It can tear. So that would be something that I could add that does move with the market. Right? And outside of that, I could be heavy on gold as well as silver as well as bonds. You know, and you hear that and people are like, what? Gold and silver and bonds, you boomer. It's like, well, yeah, I see why you would say that, because just like TLT, look at this. From 2014 all the way till 2020, you know, 6 years of nothing. Same with gold. Same with gold. Look at this. We'll pull up IAU. I like it rather than GLD because it's so cheap. Right? So you can average down easier because it's cheaper per share. You know, since 2013, basically all the way till, you know, same level at 2019. Nothing for years. Well, they cut interest rates. Well, when they cut interest rates, did it do nothing? You know, we were at 22 and we saw 38. Thing nearly doubled. So, I've got my plan ready to go. Again, to wrap it up, I see a little pullback on gold. As well as maybe, look at the setup on silver. Are you all serious right now? This thing is ready to, looks like a dragon ready to strike. Or a rattlesnake ready to just take off into this volume gap up here. I've got my plan ready. I'm ready to go. If there is a drop in Bitcoin due to the market tanking, if and when this happens this summer, I'm going to be buying like mad. So what equity does and the stock market does, as a trader, I don't care. As an investor, I somewhat care, but as an investor, I have other options, which I've went over in this video. If you guys like this content, make sure to like and follow for more.